Get ready because the future is arriving faster than ever, and here at ElectroDrive News, we're bringing you the absolute latest, the most electrifying updates that are shaking up the world. From the cutting edge of automotive innovation to the seismic shifts in global markets, if it's happening, we're on it, and you're going to want to hear this. The pace is relentless, the stakes are high, and today's headlines are packed with game-changing developments you simply cannot afford to miss. We've got critical insights into major players navigating intense market battles, groundbreaking strategies from automotive titans, and a deep dive into the real-world experiences shaping our electric future. Buckle up, because this is ElectroDrive News, and we're kicking things off right now. First up, we're diving deep into the turbulent waters of China's EV market, where one of the biggest names is facing unprecedented pressure. We'll uncover the strategic challenges and the brutal realities of a price war that's forcing even the most established players to rethink their entire game plan. You won't want to miss this breakdown of how market dynamics are impacting major manufacturers and what it means for the future of electric mobility. Then, we shift our focus to a German automotive giant making massive strides in its electrification journey. We're talking about bold strategies, calculated risks, and the meticulous execution required to stay ahead in the fiercely competitive EV race. Get ready for an in-depth look at how one of the world's leading luxury brands is positioning itself for dominance in the electric era. Finally, we hear directly from a consumer experience that highlights the real-world impact of adopting new technology. What happens when expectations meet reality in the EV space? We've got a story that cuts through the hype and gets to the heart of what potential buyers need to know. Don't forget to smash that like button, subscribe for your daily dose of electrifying news, and ring that notification bell so you never miss an update. China's EV market under siege. The Chinese electric vehicle market, once a beacon of explosive growth, is now grappling with a severe downturn, forcing major players like Li Auto into strategic survival mode. The industry is caught in the crossfire of an intense price war, a battle that is not only decimating profit margins, but also fundamentally altering the competitive landscape. Li Auto's recent performance is a stark indicator of these challenges, with the company missing Wall Street's second quarter earnings and revenue expectations, sending its stock plummeting. Shares saw a significant drop, extending a rough year that has already seen substantial value erosion. The core issue lies in the aggressive pricing strategies adopted by nearly all manufacturers to capture consumer attention amidst cooling demand. Li Auto reported adjusted net income that fell considerably short of analyst projections, and revenue also saw a year-over-year decline, a troubling sign for a company expected to be on a growth trajectory. While vehicle deliveries showed a marginal increase, the revenue figures paint a grim picture. Higher sales volumes are no longer translating into proportional financial gains. This disconnect is a direct consequence of the price cuts that are eating into profits at an alarming rate. China's EV sector is characterized by its sheer density of competitors, featuring global powerhouses like BYD and Tesla, who have repeatedly initiated price reductions. This has created a domino effect, compelling other manufacturers, including Li Auto, to follow suit, even as the overall domestic demand shows signs of strain. The current market dynamic is one where expansion does not guarantee profitability, pushing companies to the brink. Efforts to weather this storm through new model introductions and incentives are underway, but the earnings reports underscore the immense cost of this market fight. Li Auto's situation is particularly noteworthy when contrasted with the broader market performance. While major indices have shown resilience, Li Auto's stock has been in a steady decline, raising investor concerns about the long-term impact of the price war on profitability. The company faces the immense task of improving its margins without conceding market share in one of the world's most competitive automotive arenas. Analysts remain divided on Li Auto's prospects, with a mixed rating reflecting the uncertainty surrounding its ability to navigate these turbulent market conditions. The prevailing sentiment suggests that while the company's strategic challenges are significant, there is a potential for recovery, contingent on successful adaptation to the harsh realities of the Chinese EV market. But the challenges in the EV world aren't confined to one market. Stay tuned as we explore how another automotive giant is strategically navigating its own electrifying path. BMW's electrification offensive. BMW is aggressively pursuing its electrification strategy, aiming to solidify its position as a leader in the premium electric vehicle segment. The company's approach is characterized by meticulous planning, significant investment in new technologies, and a clear focus on balancing innovation with robust risk mitigation. This comprehensive gambit is designed not only to meet evolving consumer demands, but also to preemptively address the inherent challenges of the rapidly transforming automotive industry. At the heart of BMW's strategy is the development of a diverse portfolio of electric vehicles across its various brands and model lines. This includes fully electric vehicles, plug-in hybrids, and potentially hydrogen fuel cell technology in the future. The company is investing heavily in battery research and development, securing supply chains, and optimizing manufacturing processes to ensure both the performance and cost-effectiveness of its EVs. This multi-pronged approach aims to cater to a wide spectrum of consumer preferences and usage patterns, ensuring that BMW remains a relevant choice for a broad customer base. Risk mitigation is a critical component of BMW's electrification plan. The company is keenly aware of the potential pitfalls, including volatile raw material prices, the complexities of charging infrastructure, and the intense competition from both established automakers and new entrants. To counter these risks, BMW is focusing on strategic partnerships, vertical integration where feasible, and continuous adaptation of its production strategies. Furthermore, the company is investing in software development and digital services, recognizing that the future of automobiles lies not just in hardware, but also in the integrated digital experience they offer. BMW's commitment to electrification is not merely about compliance with environmental regulations. It is a fundamental business imperative. The company understands that its long-term success hinges on its ability to transition smoothly and decisively into the electric era. This involves not only technological innovation, but also a profound shift in corporate culture and operational agility. The German automaker is striving to maintain its reputation for performance, luxury, and driving dynamics while embracing the sustainable mobility solutions of tomorrow. Industry observers note that BMW's methodical and well-funded approach positions it strongly within the EV race. While the path forward is undoubtedly challenging, marked by intense competition and rapid technological advancements, BMW's strategic execution and commitment to innovation suggest a determined effort to lead rather than follow. The company's ability to effectively manage the transition, particularly in terms of production scaling and market adoption, will be key to its continued success. While major automakers strategize for the future, the present reality for some EV owners can be quite different. Get ready for a consumer story that highlights the unexpected hurdles faced on the road to electric adoption. Li Auto stock plummets amidst EV price war. Li Auto's stock experienced a significant downturn, shedding value sharply as the company failed to meet Wall Street's second-quarter financial expectations. This decline is a direct symptom of the intense price war currently engulfing China's highly competitive electric vehicle market, a conflict that is eroding profit margins across the industry. The Chinese EV maker reported adjusted net income of 1.5 billion yuan, $204.9 million, a figure that fell considerably short of the $252 million analysts had projected. Compounding these disappointing earnings, revenue for the quarter also dipped by 4.5% year-over-year, reaching 30.2 billion yuan, $4.2 billion. This revenue miss further underscored analyst expectations of $4.5 billion, highlighting a widening gap between Li Auto's performance and market forecasts. The primary culprit behind this financial squeeze is the aggressive price cutting that has become the norm among Chinese automakers. To maintain sales momentum and customer interest in an increasingly crowded market, manufacturers are slashing vehicle prices. While this strategy might help move units, it directly impacts the profitability of each sale. Li Auto's delivery numbers for the quarter showed a modest increase of 2.3% compared to the previous year, with 111,074 vehicles delivered. However, the fact that sales revenue declined despite this slight rise in volume starkly illustrates the margin compression problem. Analysts had anticipated stronger delivery figures, around 124,700 vehicles, and higher revenue, reflecting a belief that Li Auto could navigate the price war more effectively. The company's performance, however, demonstrates that even market leaders are finding it difficult to shield their bottom lines from the fallout of this price competition. The Chinese EV sector is exceptionally saturated, with major players like BYD and Tesla consistently reducing their prices, triggering a ripple effect throughout the industry. Li Auto, like many others, is compelled to participate in this price reduction to remain competitive, even as domestic demand shows signs of softening. This environment has created a scenario where market share growth no longer guarantees increased profitability. Automakers are attempting to mitigate the impact of this fierce competition by introducing new models and offering various incentives. However, the latest earnings reports reveal the painful reality of this fight for survival, where the cost of maintaining market relevance is proving to be substantial. Li Auto's stock performance stands in sharp contrast to the general upward trend observed in broader market indices like the S&P 500. Investors are expressing growing concern that without a cessation or at least a de-escalation of the price war, profitability will continue to be compromised, regardless of sales volume increases. The company's immediate challenge is to find a way to enhance its profit margins while simultaneously defending its position in China's highly contested EV market. Wall Street sentiment towards Li Auto is currently mixed, with a hold rating prevailing based on recent analyst reviews. The consensus price target suggests a potential upside, but the path to achieving that target is fraught with the uncertainties of the ongoing price war and its impact on future earnings. While market dynamics present significant hurdles for manufacturers, consumer experiences also shape the perception and adoption of electric vehicles. Up next, we explore a first-hand account that sheds light on the practical realities and potential pitfalls of EV ownership. EV ownership realities, a Mercedes owner's cautionary tale. A viral social media post has brought to light the frustrations and unexpected challenges faced by a Mercedes-Benz electric vehicle owner, highlighting a critical gap between consumer expectations and the current state of EV infrastructure and support. The owner's candid account, filled with repeated breakdowns and difficulties with public charging, serves as a cautionary tale for prospective EV buyers. The core of the owner's complaint revolves around what he describes as frequent electrical issues, necessitating numerous visits to the dealership for repairs. He recounts having to tow his vehicle to the service center approximately 15 times, expressing a deep sense of regret about his purchase. The video emphasizes the importance of thorough research and preparation before committing to an EV, particularly concerning home charging solutions and understanding the nuances of public charging networks. His experience underscores a common issue within the non-Tesla EV ecosystem: the inconsistency and unreliability of public charging stations. He details frustrations with long wait times, malfunctioning charging apps, and general confusion surrounding station setup and operation. This lack of a seamless charging experience, often contrasted with the more integrated Tesla supercharger network, can significantly detract from the convenience of EV ownership. Furthermore, the owner admits to not installing a home charger, a step many EV experts consider essential for practical daily use, especially for vehicles with a typical range of around 220 miles. The situation also points to a potential failure in the sales process, with suggestions that the dealership may not have adequately prepared the customer for the realities of EV ownership. While the buyer bears responsibility for due diligence, a proactive and informative sales approach from the dealership could have mitigated many of these issues. Key aspects such as the necessity of home charging, the current state of public charging infrastructure, and the specific maintenance requirements of EVs should ideally be part of the pre-purchase consultation. Beyond charging concerns, the owner's claims of frequent breakdowns warrant attention. While the exact number of service visits is unverified, it's noted that certain Mercedes-Benz EQS models have been subject to multiple recalls related to software glitches, drivetrain issues, and safety system malfunctions. Such problems, while not exclusive to Mercedes, can be particularly concerning for owners who invest heavily in luxury electric vehicles, expecting a premium and trouble-free experience. Despite this individual's negative experience, broader industry data suggests high satisfaction rates among current EV owners, with a significant majority expressing likelihood to purchase another EV. However, this satisfaction is often predicated on proper preparation and a realistic understanding of EV technology. Brands that excel in customer education and offer longer ranges and competitive pricing, like Hyundai and Kia in the mass market, tend to garner higher satisfaction. Luxury brands, while often at the forefront of technological innovation, sometimes lag in delivering a consistently positive ownership experience and customer support. The owner's viral video serves as a valuable reminder. Owning an EV requires more than just the desire for advanced technology. It demands a commitment to understanding its unique operational needs, a willingness to adapt to evolving infrastructure, and, crucially, ensuring that the vehicle aligns with one's lifestyle and charging capabilities. The experience highlights that while EVs represent the future, a smooth transition depends on both informed consumers and responsible manufacturers. These individual experiences paint a picture of the current EV landscape, from market battles to user realities. We'll wrap up today's show with a quick recap of all the major stories. Don't go anywhere. And that's a wrap on another electrifying edition of ElectroDrive News. We've seen Li Auto grappling with China's brutal EV price war, BMW pushing forward with its ambitious electrification strategy, and a stark reminder of the learning curve for new EV owners. What a ride! If you found this update valuable, do us a favor. Hit that like button, subscribe to the channel for more cutting-edge news, and ring the notification bell so you're always in the loop. Plus, drop a comment below with your thoughts on today's stories and follow us on all our social channels to keep the conversation going. Until next time, stay charged.